On the daily, though, we're bearish. And on the 4 hour, we're bullish. And on the 1 hour, we're fucking around. We're in between. We had like a break of structure here, but like not much to do off of it. Okay, so today I didn't trade today because we had Pal speaking, but today is a perfect example of when we probably wouldn't want to trade the S&P 500. Unless we can find some sort of bearish confirmation. So how would we find that? Go on the hourly, right? And again, this is where we find our execution strategies. The daily time frame, we have a break structure to the downside. Cool, so we want to be bearish. We're looking for any sort of bearish, any sort of bearish confirmation. But we also have to keep in mind that we are bullish on the 4 hour. Okay, so that means when we're looking for bearish confirmation on the hourly, we have to keep in the back of our mind that, hey, we are still bullish on the 4 hour, and until we turn bearish on the 4 hour, we can't target, and we'll talk about this in our taking profit video, we cannot target these absurd long time frame take profits because we haven't been proved to the downside on the 4 hour. So yes, we can look for bearish bias on the hourly because the daily's saying down. But we need to be tentative with our take profits on this. Okay, so my biggest rule of thumb is like, okay, figure out what the daily time frame is saying. What's the daily time frame saying on gold? Bearish, cool. Our ideal trades will be to the downside. Guys, because believe it or not, the majority of the daily moves on the S&P, if that's what we're talking about, is going to be during New York session. Everything else is just chop. The biggest move, what causes these big moves to the upside, these big moves to the downside, is New York session. So wouldn't you want to be trading within the bias? You probably would, until you're proved wrong. And those are the trades that you lose. When you're proved wrong, but then when you're proved wrong, it's... Okay, so we're going to do something kind of fun today. We're going to make the daily bias boot camp video like right now on Zoom. So this is with my Discord before pre-market. Market opens in around 17 minutes. We're going to make our daily bias video, like explaining my daily bias on these pairs. So we're getting recorded on here, and this is also live, like market analysis. And then you'll also see, and then we can also like go over how the daily bias played out with the live trade, or sorry, the trade recap afterwards. So I thought this was a fun idea. Let's get into it because we don't have much time. Okay, so I know I didn't have the chart in the last video. I'm very sorry. I messed up, all right? I know, I don't know how it happened, okay? But anyways, you guys heard me explaining it. We'll explain it one more time with the charts this time, okay? So what I like to do for daily bias is we start off on the weekly time frame, figure out, okay, where's our overall direction, right? We can even use a line chart, okay? The S&P, it's been moving up. This is, like, honestly, very surprising to me. The fact that we're breaking structure back to the upside, very, very surprising to me. The fact that we're about to break structure on the monthly time frame to the upside, okay, like, this has to be the next, like, I'm not convinced that the S&P, I'm not convinced whatsoever that the S&P 500 is bullish. So my next draw on liquidity is up here. Okay, we also have a draw right here, okay? But we broke monthly structure to the upside. Unless today closes below this low, this high, and I don't think that's gonna happen. We have news today that comes out. In 30 minutes in a market open. That won't do shit though. A candle's not gonna come. No candle on the S&P is going to go down to, like, 3% in a day with no, like, major high impact news. It's just not gonna happen. So I'm very, I'm trying to figure out what the market makers are doing with this because I've read the fundamentals. The fundamentals doesn't look good. Anyways, we're getting off track. We're getting off track from the daily buys. Anyways, we look at the weekly time frame. We see the overall direction. Overall direction, bullish. Then we head over to the daily time frame, right? Because we are trying to base our trades based off of daily candles. Okay, so if we can understand the daily market structure, if we can understand the daily trend, then we'll know what our daily bias is, where we would ideally want to take a trade, right? If we're bullish but we're in a retracement on the daily, are we going to try and take a trade off of off a short, off a retracement, or would we want to take the extension, because the extension is always way larger and way bigger than the retracement, right? It's higher highs and higher lows when in an uptrend, right? The highs go so much farther than these little retracements down. So ideally you're trying to catch longs in a uptrend, right? So that's literally all we do. Okay, we go to the daily time frame. We broke structure the downside right here, and this is why I took shorts yesterday, because we swept daily liquidity up here. Although we'll get into this later, we didn't have confirmation on lower time frames, and that's where I fucked up. Oops.
You ain't got shit. You're my wash shit. I'm sick. I'm it. Not sick. Yeah, my watch sick. Yeah, my sock sick. Yo, bitch. Yeah, she not it. What is that? Oh, what? Oh. I'm like, what the fuck is a TV? I thought you used a tick bite. I'm like, what the fuck? You got bit by a tick? TB, bro. Tick bite. It makes sense. It just makes sense. Bookie.
Okay, alright, okay, alright, oh. In my head, I was thinking, once it got to the 2K, I should just exit out and then see where the market is going to move, because it might just shift down and I can maybe catch another entry. So I'm I'm only $30 off of 40K. 4K. I said 40K. Damn. I'm gonna close out of it. And then, so we took our trade. I'm not really caring about the number of how much we just took. My main thing is we took a trade from here to here with what we learned from TJR, and it worked. The reason I took a trade right here is because I was looking at this, and then I seen it broke structure to the downside, and I figured, oh, liquidity sweep is about to come in. And that's exactly what happened right here. Right here, when I seen this, I'm like, when I seen it pass below this, I'm like, oh, I'm thinking of a liquidity sweep, right? And then I waited until I seen a reaction to the upside, right? Because I already seen the breaker structure. I seen there was the liquidity sweep right here. And then once I seen these two blue bars, I'm like, oh yeah, boom. And I hopped in, and then I just stopped looking at it. I literally hopped in and closed the chart. I did not look at it or anything. And then I forgot about it this morning until I went to go take a shit. I went on my phone. I'm like, let me see how the market's doing. And I'm like, oh yeah, I do have a trade. And then I seen that I'm positive for it. The main thing I was looking for. If I didn't see any numbers, I'm like, okay, my stop loss got hit. Okay, type shit. I'm already at 19K. I went from 23 to 19. So I'm losing. Okay. TJR video for today. So yeah, let's get into it.
bias part 3, where we'll go over charts again. This is kind of just going to be like a recap sort of thing. Recapping like how we find our daily bias, I guess. And we're just going to do a little bit more of what we did yesterday. Okay, so again, what are we trying to figure out? First thing, like the reason why I mentioned like the weekly time frame is if we break structure to the downside on the daily, but we're in an uptrend on the weekly, odds are it's going to be a weekly retrace. And that's just something you have to keep in mind, right? And that's something you should keep in mind for every single time frame is whatever the higher time frames hold higher power and are going to cause the market to move in that direction, right? So if we're looking at the weekly and we see break of structure to the downside on the daily like this, right? Odds are it's going to be a weekly retrace. So what can we do, right? For something like this, we can use our retracement tools. Okay, so ideally, I would have liked the weekly time frame to come into to equilibrium at least, right? Or fill this fair value gap. And that's kind of what I was banking on this past week because it was underneath this monthly low. Price did not decide to close underneath the monthly low as I thought it would. Okay, and that's fine, right? I'm completely fine with that. It broke structure to the upside on the monthly. Again, though, economic climate looks awful. So what does that lead me to believe? Well, there's liquidity again on the monthly time frame all the way up here. So where is price likely going to draw towards? Here or here, right? And then cause a reaction off of it. I personally don't think we're done. Personally, that's just how I feel. Yeah, I don't know. That's just how I feel. That's just how I feel on it because, dude, the news data is telling us, we still got shit to work out, bro. Like there are too many people that are still rich and that still have all their money from this COVID shit. And my ideal target, and sorry, this is getting way off track, but this is good information anyways. My ideal target would have been to take out these COVID lows. These lows that were made through COVID where most people were probably buying. After we were able to reclaim all-time highs after this big dump, this was smart money. This was the rich getting richer. Liquidity sweep launch. Okay? All dumb money entered off of all-time highs getting taken out. This is where people got rich, right? From like here up to here, right? That's where people got loaded off of just COVID stocks.
Not I. Hold on.
This is
Yo.
hasn't really done anything.
Nah, Raven, Ray. I may or may not have just realized that my mic was muted at the beginning, but hey, welcome back to JPS. No, sorry, I don't know why I said it like that, but yeah. So we're just continue watching our TJR video for today, since we did not watch it throughout the day, and it is currently still Monday, but only by a few minutes. I was editing a video. And then I realized that I was not gonna have enough time to edit and post it today, so I'm gonna do that tomorrow. There's about 4 minutes before 12, and it'll be Tuesday. So yeah, so let's continue watching our TJR video for today. God bless you guys, and thank you for joining me.
Ideally, right? This is a quarterly order block. Why? Because we swept liquidity, moved higher. We didn't come near it. What did we fill with this?
Imagine being able to build anything
Bro.
just by thinking about it. Meet Base 44.
We didn't fill like really anything. Maybe we hit equilibrium. But other than that, barely hit equilibrium. I think this thing wants to go lower. Like this is not enough. Like ideally on a high time frame, one tiny wick during 1 week, that's not enough time for smart money to fill their orders. Right? It would make sense for it to take out these COVID lows, fill this order block. And then we liquidate all the people that got rich during COVID. And that's essentially why we have to fix this inflation shit. Because we were handing out money like nobody's fucking business during COVID. We were literally handing out money to like handing out like 2.8K, bro, to people who didn't deserve it and to people who didn't need it. And what were they doing? They were buying stocks. They were investing. You guys remember back in COVID when freaking investor TikTok was going crazy? These are the best stocks to buy with your stimulus check. Dog, are we being for real right now? So, anyways, like, cool. We broke structure of the monthly. This is the next draws on liquidity. I still think we're going lower. At least to take out, like, these two lows. Okay, but anyways, we're getting too caught up here now. Okay, so back to daily bias. I like to look at the weekly to understand, okay, if we get a daily break of structure to the downside and we're in a weekly uptrend, we should understand that, okay, we need to use our retracement tools to figure out where price wants to draw to. Okay, and keep that in mind while we're trading on the daily. Okay, then we get over to the daily and we figure out, okay, what is our daily bias? What is daily market structure? Oh, we got a break of structure to the upside. Cool. We're looking for buys. And then from there, scale down into the 4 hour. Okay, what is the 4 hour time frame saying? Buys, perfect, even better for long positions. What's the 1 hour saying? Buys, perfect, even better for long positions. And then what do we do when we scale down to the 15 minute? What do we do on the hourly in the 4 hour? We use our
Yo, welcome back to a brand new week. Today is Monday. Oh shit, today is currently Tuesday. But yeah, today is currently Tuesday. I believe I did record yesterday, but I also had my update. I also had like the trade or some shit that I added the trade that I had on the video on the episode that I posted. But okay. So yeah, we're gonna watch this take profit, and then that'll be it for today. And then tomorrow I'm gonna watch stop losses, and then I'm also gonna watch calculating lot size.
My little baby boys. Hello. Are you guys ready to learn again today?
I did take a trade currently. I am currently in one. This is currently where we're at. I believe it's gonna hit up here. It's just hitting a little retracement. Which is down here. I've been had this retracement marked ever since this trade right here. I could have put this trade higher, but I just wanted to be, I just did it from here to here because, I was a pussy is the simplest way to put it. I was a pussy. So, now we had all of this movement. I could have, I definitely could have taken a trade right here because I knew it was going to retrace here, but I didn't because I'm a dummy, but that's fine. And then, I didn't see this. I didn't see this for, then this happened. This happened. All of this happened today. All of this down shift right here, happened today. All of this. And I didn't hop in at all. So now, I believe it's, the momentum is down, like it's like pretty much done. So that's why I also took this trade, and also it hit this, it retraced down here. There was a retracement down here and a retracement right here. So I believe this is a liquidity sweep that just hasn't taken off yet, and also these retracements here, which are gonna help with that. So that's why I have it. That's my trade right now. So yeah.
Say about where to take profit on your day trade.
If you would like to watch these live, Twitch/JPSMMT. If you would like to watch it live.
Trading journey.
All right. Do I waste your guys' time for the first 5 minutes of this video, or do we get right into it? We'll get right into it. Okay, because you guys seem to enjoy last one. Let's get down to business. Okay. I'm sorry. Focus. All right. I can't let the ADD and the pre-worky get ahead of me, okay? First of all, can't cramp, drink my electrolytes, just had a great day at the gym. Let's sit and talk. How's your Sunday going? Mine's going great. Thanks for asking. And let me know in the comments how your guys' Sunday is going.
It's never been easier to start a podcast than with Riverside. Here's how it works. First, go to Riverside.
All right, hopefully you guys are starting to get a good feel for all the shit that we've been covering, because now it's like, boom, we have the building blocks, we put the pieces together. You guys should know the fucking strategy by now. Now we just have the small things, okay? We're going to go over take profits today. We're going to go over stop losses tomorrow. And then from there, I need to do another check-in, and then just, boom, just start grabbing videos. Okay, and then, like, just seeing what you guys want me to explain, all right? So, with that being said, let's get into taking profits, okay? Taking profits is relatively easy, okay? Like, it shouldn't be too difficult to explain, but essentially, where are we looking to take profit at, okay? It's at our building blocks, okay? So, we're not going to go over execution, all right? We'll just go over where we're looking to take profit, okay? And again, it's literally just at our building blocks on whatever time frame that you're executing on, okay? Or whatever, like, one higher time frame you're on, okay? So let's say we enter short, okay? This would be a stupid short position to take because we're in an uptrend on a bunch of different things. But let's just say we take a short off of this liquidity sweep, break of structure to the downside. We enter on this candle close. For me, what would my first take profit be? Okay, again, this is a terrible trade to take because, like, our first take profit would essentially be here. Okay, but this is just showing, like, how we would set this up, okay? Don't focus on the risk reward. We're just going to go over what are high confluence areas to take profits at. And it's our building blocks, okay? So what do we have here, right? Our building blocks are areas where price is likely going to react off of, or where price could fill orders, right? So what is this move right here? Swept liquidity, rally higher. This is an order block, okay? So you could have a take profit at the top of this order block or a take profit at the bottom of this order block. What also is in line at the bottom of this order block? Liquidity, boom, another one of our building blocks. What else could we do? Oh, what's this? A fair value gap. Cool, you could have a take profit, boom, within here and at the bottom of it. It's really simple. That's like, for me, when I set take profits, I set it off of boom, the one higher time frame draw on liquidity on whatever execution time frame I'm on. Okay, so let's say we take a short position on the 5 minute. Okay, I would probably scale up to the 15 minute and find the first draw on liquidity, okay, within the direction that we're taking the trade. So for me, that would be here. Okay, cool. Is this a good trade to take? No, okay, we already explained that, but this is just for examples. Okay, cool. This would be my first take profit. Second take profit could literally just be, boom, this fair value gap. And then I always set, like, I don't know, I usually set like 3 or 4 take profits Okay, that's not really necessary. You know, you guys can put that into your trading plan. However many take profits you guys want, you guys can set it to, you know, oh, I'm only going to have 3 take profits. The first take profit is going to be the one higher time frame draw on liquidity, and then I'm going to use building blocks for the rest of it, okay? Again, with putting all the pieces together with that little series, we talked about how we can get 15-minute entries for 4-hour trades. That doesn't necessarily mean our first take profit is going to be off of like 4-hour liquidity. It could be if you want to stay in the trade for that long and if you genuinely think it's going to get up there. Me personally, since we're taking trades on lower time frames, I like to set take profits based on the execution time frame that we're on. Okay, so I find draws of liquidity on whatever time frame that we're executing on. I find building blocks for whatever time frame that we're on, and that's how I set my take profits. It's really that simple. Okay. I think taking profits is one of the the smallest things that you guys need to worry about. I think the largest thing would be daily bias, and then following that would be execution, and then following that it would be stop loss, and then following that it would be taking profits. Okay, this is kind of the least of your worries, because if you're getting a good execution point, odds are price is going to go in your favor, and you know, most of you guys aren't going to have a 1 to 10 risk to reward for your first take profit. Most of you guys is going to be like 1 to 1, 1 to 1.5, 1 to 2, 1 to 3, 1 to 4, 1 to 5 on 4K trade, on BDs, on GDK, on O block. All right. So, sorry, I thought it was gonna be normal, but anyways, that's literally all I do. Okay, like I really don't know how else to explain it. So like, boom, for this example, okay, we took out liquidity here.
An award-winning trading app that is as easy to set up as your favorite playlist. Voted most popular broker.
All right, cool. We get a break of structure to the upside. Okay, let's just do this on the 4-hour. Cool, we get a break of structure to the upside. Boom, we fill this fair value gap. Maybe we enter off of that. Boom, fair value gap entry. Stop underneath here. Let's say we're entering on the 4-hour. Okay. Most of the time, my first take profit is going to be minimum 1 to 1. Okay, that's kind of the goal. All right, so boom, 1 to 1. What kind of matches up with that? Cool, this high. Draw on liquidity, perfect. First take profit. What can be another take profit? There's another draw on liquidity. There's not much action within here. Boom, okay. Second.
Chook, 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 chook. Chuck T, Chuck T, Chuck T, Chuck. Yeah, that's better. Alrighty. Get out of my beanie. Get out of my beanie. And welcome back to the next day. We are going to continue watching TJR. We watched stop losses. We watched take profit yesterday night. So we're going to start today with stop losses. Then after stop losses, we're gonna watch calculating lot size, and then after that we're gonna see if we can take a trade while we're live, and if we can't, we'll just look at the market. So far, I took a trade last night, and this morning it didn't hit my take profit, but it did go in the direction that I wanted it to. And what I mean by that is I took an entrance right here. It's in the clip of yesterday too. I took an entrance right here. I knew it was going to come back down onto this retracement. And once it did, it went all the way up here. And then came back down. And then went all the way up here. Right here, I was at about 1,000. And then I was trading on Bitcoin. So that was 2 bands right here. And I'm like, nah, let me not. I could have, and then I seen these signs that it was going down, and I still could have left with like 15, and I still waited, and I still waited, and now we're down to the retracement. I ended up exiting out right here with just 300, and the number doesn't really matter, but 300 instead of 2. You feel me? I could have left with 2 instead of I left with 3. So now I'm just waiting for it to pass certain shit. So which one should I wait for it to pass? There's some high. They could pass this one, this one, this one, this one. So I can mark them out. I gotta watch out for it to take out this high, this high. And that high. So those are the highs I'm waiting for it to take out before, I take a trade to the upside again. And then for the downside, it just needs to go below this retracement. And I mean, once it gets below this, like it hits this bottom purple line, that's when I'm go to the downside, because it should want to hit this after that. But I'm just waiting for the retracement for this, because I believe it will retrace this before it does some else. So this is a good sign right here. Pepino dorito buenito manito manito. Yeah, I believe this is where it might start going up, so I believe it's gonna go down and then go up again. Like go a little bit down and then go up. Like right now it's just right here, right for me, right here. Came down on me, I'm gonna wait to see what this candlestick says. So in 4 minutes, that's when I'm gonna decide whether I'm for the trade or not. To the upside. So let's start this stop loss.
Unlock the world's largest, most liquid financial market.
All right.
If you would like to watch us live, JPSMMT on Twitch.
I asked the Discord and we were like, yo, let's just do the freaking boot camp video while on Zoom too. Okay, so today's video is going to be on stop losses. And the reason why we have our current or our previous trade that we took today that got stopped out up is because we're going to use this as our first example of like just stop loss placement. But first of all, we're going to start off and just like move away from this for now. And we're going to, or give me 1 second. And we are going to talk about just like where to put stop losses in general, and then like kind of, I don't know, like where to put stop losses in general, and then also overall, like I'm spacing out. Sorry. Today we're doing a video on stop losses. Okay, so to start off, the most basic and the most like fundamental thing in terms of stop losses, I rarely like do like kind of a elongated stop loss. Okay, and the only times that I'll do that, we'll talk about that later. But most of the time, when people have a stop loss, they'll see, okay, liquidity sweep, break of structure, and then like order block entry, and then boom, they're in, right? Let's say it's a short position. They will typically almost always put their stop loss above the liquidity sweep, myself included. Okay, I almost always put my stop loss above the liquidity sweep. Okay, and I do this because if our bias was correct, if liquidity was actually taken out, then price has no reason to come back above this high. Right? Because this is where right? Our order block. This is where orders were filled, and the price point above this high, and we'll talk about why we put our stop loss slightly above the highs as well to cover for spread. But if price ends up coming back above this high, then that means the liquidity sweep was not valid. That means liquidity was not swept. That means there was not enough volume or volatility. That means there weren't enough orders to be filled to push price in our bias and in our direction. So our stop loss always has a purpose. Our stop loss is essentially our invalidation area. Okay, so if price ends up coming back up here, then cool. Okay, that means our trade is invalidated, and that liquidity sweep, whatever we were taking the trade based off of, that area, that price point, that price range, that confluence, that building block was not valid. We were wrong. Okay? So that's standard, okay? That's like the most basic thing. I almost always put my stop loss above the liquidity sweep. Okay, so oops. Boom. That's as simple as it gets. Okay? That's like, you're just like super simple, perfect fucking like easiest way to do it. Stop loss above your liquidity sweep. Whether you're entering off of a fair value gap or an order block, your stop loss should still be above the liquidity sweep. It should not be right above this high, right? Let's say you enter off of like this, and it should not be right above this high. Why? Because price could easily come back a little bit higher and then come back down. Okay, you want price to be above the liquidity sweep because that's where price would be invalidated for us. Cool? Cool. Okay. Moving forward, what are some exceptions? Delete this. Some exceptions to this. And I don't even really like these exceptions. If price looks like this, and this is our breakup structure, and the liquidity sweep is so high up that it pretty much would give you a terrible risk to reward, then I try and find other confluences within here. Like, okay, let's say there's a fair value gap here, an order block, or like order block like right here. I would put my stop like above the order block, and I wouldn't put it above the liquidity sweep. Does that make sense? Because we want our ideal trade is a good risk to reward, right? But the reason why I don't necessarily like doing that is because, right, the invalidation point is above the liquidity sweep. So price could still technically move up and take you out of the trade and still go within our bias. Okay, so that's the easiest thing to do. Just put it, boom, below or above the liquidity sweep. Now let's look at the trade that we took today and go over how price is still technically within our bias. And look at this right now. Like, we would still be in profit. We would be in profit right now. But that's nothing to cry about. It just means our bias was correct. Good job, us. But anyways, if we're seeing this right now, and we see, okay, this is where our stop loss was. What were our confluences? Go look at the trade recap. I don't want to go over it again. But we entered off of this breakup structure, off of this candle closure.
Having an e-commerce store and a brick and mortar store, keeping track of inventory was a headache.
Okay? We put our stop loss, first of all, every single time, at least put it like, I would like to say like 0.5 points, 0.5 points below the actual price point, or figure out what your spread is on your broker for the specific pair. Because if you put your stop loss directly on this price, like literally on this exact price on your brokerage, guess what? When price comes down to like right here, you will be stopped out of the trade. Why? Because the ask price is right here and the bid price is right here. Or I don't know what the difference, like I don't know which one's higher, which one's lower, ask or bid. But you know what I mean. Bid or ask price, right? You are going to get stopped out by spread. And you're going to be screaming and fucking crying if price ends up coming back up and going in your direction. So what do you have to do? You have to account for spread, because guess what? Even if price comes to this exact price point, your stop loss is going to be under here and you're going to be protected because it's only invalidated. Your trade is only invalidated once this price point gets broken below. Okay, so what I always like to do, I like to give it like a little bit of room. So for us, ours was like, what was it? It was four below. So it was like right here. As you can see, we got stopped out by this. Okay, and that was for, some other reasons. Maybe we should have covered ourselves by putting price lower over here. I put my stop loss underneath here because we had a liquidity sweep on the 5-minute right here, and then a break of structure on the 1-minute to the upside. So I was considering this my liquidity sweep. So that's why I put our stop loss right here. Does that make sense? Okay. What are some of our exceptions for, maybe when we don't have a liquidity sweep, or maybe it's like a higher time frame trade, such as this one. Okay, and look at this price. And we're on Zoom right now with my Discord. I know they're raging because we had a 5-minute break of structure right now. But hey, that just proves our bias was correct. Okay, so I know y'all are raging. I don't even have the Discord open, but I know you guys are raging. Some exceptions, right? Like for this example, okay, we had a liquidity sweep on the 15-minute, break of structure to the upside on the 15-minute. Could we have done a long-term trade on the 15-minute? Sure, but no one wants to have this all the way down here and have to make this, which would have been our final take profit, our first take profit, for a way lower risk to reward ratio. Okay, so what can you do on that? Well, you could scale into a relatively higher time frame, okay, and try and find, maybe a low, like one scale lower low that's underneath the liquidity sweep if you want to be extra safe. And again, you need to keep risk management in mind. You need to keep risk management in mind with this. All of this is just purely based off of your own risk tolerance. That's what I like to say. Whatever you are comfortable risking, because I use a set lot size, and we'll cover that in this boot camp, how you can figure out what your set lot size should be, and then how you can find the scale of different lot sizes to use based on your confidence for the day. So like for today, for example, we won't get too deep into this, but today, for example, I risked half of my usual lot size. Usually on the S&P, my normal is like 100 lots, and I know you're going to say, damn, that's fucking crazy. It's 10 units per lot instead of 100 units per lot size, which is what most brokers are. So just it really would be essentially 20 lots on like a normal offshore brokerage. Hanko's just a little bit weird. Okay, so my usual is 200. I risked 100 lots today because why? We had high impact news, and we also have a bank holiday tomorrow. So odds are we were going to have relatively low volatility, kind of choppy market conditions, and we also had high impact news. We have high impact news throughout this entire week. I'll probably de-risk myself this entire week. Okay, that's something to keep in mind. So it's like your stop loss is purely based off of your risk tolerance, and then also understanding where is your invalidation point. That's all it is. Your stop loss should never be shouldn't be based purely off of points or pips. It should be based off of where price is then invalidated, where your bias is invalidated at that point. Okay, so for me, my bias was invalidated today because I saw we had a sweep of liquidity and a break of structure to the upside. My stop was underneath this liquidity sweep. Yes, my overall daily bias was bullish, right? And that is getting fulfilled. But for this specific execution, for this specific trade, Happy 4th of July, but I'm gonna be busy today because it's the 4th and it's a holiday. And if everybody else is taking days off, so am I. Okay, I'm gonna make this video and then I'm gonna leave. All right,
I'm gonna leave.
We'll hair in my mouth. So we'll make this really
Please,
quick.
kitty.
Today is going to be going over position sizing. Okay, so we covered take profits, we covered stop losses. And now I want to talk about figuring out what lot size you want to use. And there's essentially, there's 3 strategies. There's using a set lot size for every single. I'm about to throw that ball out, bro. Boogie is driving me crazy. Boogie, come here. Bring me your ball, bro. Where did you put it? Yeah, this is mine. You're done with this. Get on the bed and lay down. Oh, bro's giving me a headache. Anyways, sorry. Start from the beginning. Okay, there's 3 different ways that you can do this. Okay, you can use a set lot size. That's what I use. And I use a range of set lot sizes, and we'll talk about that. You can also calculate your lot size every single time. Okay, so that's what we'll show how to do. And then you can also full port, which you will never do. And if you do, I will be very upset. So 3rd option is completely out of the picture. Okay, so we're gonna go over the 2nd option right now, which is calculating your own lot size. So you are going to start off. All right, go find whatever lot size calculator you want. Okay, there's a great app on the App Store called Stinu. Okay, it's STINU. Not a sponsor, not an ad. And this is what I used to use. Okay, so when you open it, it'll look like this. I don't know if you guys can see this that well, but essentially it says account balance at the top, risk amount in percent, and then stop loss in pips. Okay, so all you do, let's say we have a $1,000 account. Okay, you type in 1,000 up there, and then let's say we want to risk 1%, we type 1 in there, and then let's say our stop loss is 30 pips, we type 30 in there, and then we go to the next, and then it gives you all the Forex pairs right there. This one, unfortunately, does not have the S&P 500. That's why we have this thing up. Okay, but this has all Forex pairs including gold. Okay, so what do you do? Let's say we're doing GBP USD. You click GBP first, and it gives you, boom, GBP / above, and then you could just click USD, then you click calculate, and it tells you the exact lot size that you should use to risk that amount for your account size. Super great app. Use that for Forex stuff. I think it's like $14 you have to pay like a year to use it. And if that's a lot of money to you guys, you shouldn't be trading. Okay, moving forward. Okay, that's how you can do it on your phone. To do it on the internet, we have this nice little website right here. Okay, and I like using this site because it has the option for the S&P. Okay, and it has Forex pairs, so 2 in 1. All right, versus Stinu doesn't have that. Okay, so same thing on here. Let's say we have a $1,000 account balance, and let's say we have a 30 pip stop loss, and we want to risk 1%. All you do, boom, click calculate, and then it throws you out a lot size. So for this, I would use 0.03 lots, right? Because we can't go any farther past 2 decimal places. Okay, so boom, what are we risking? $10, perfect. Okay, let's say we want to do.
Introducing TZ1, the one trading platform you'll ever need. Fast, flexible, efficient. Built for bidirectional trading.
Boom, okay. 0. Okay, so for this, we would have to do a 0.01 lot size. Oops, this said 200. 30. Boom, 0.03. Just like that. Super simple, super easy. This is how you can calculate your lot size. Okay, and if you don't know what your stop loss is in pips, we'll make this really easy. Ready? This is the easiest way to do it. When you set up your short position tool, okay, see this number right here? That is it. That's your stop loss in pips. So as we drag this, right, let's say, boom, our stop loss, 11. Boom, stop loss, 47 pips. Stop loss, 16 pips. Perfect, boom. 16, calculate, plug it into your phone, enter the trade, boom, we're good. We know what we're risking. Super freaking easy. Okay, moving forward to the S&P, this one gets a little bit tricky. See how things changed? So what I like to do is I like to switch it to stop loss and pips. Okay, so how did I do that? Okay, I just go here, boom, switch stop loss to pips, and then you also have to click calculate lot size within MT4 or MT5. Okay, and we'll talk about this later, the contract size or unit size per lot. I talk about that all the time on TikTok videos because everyone's like, oh, this dude is doing 100 lots per trade. No, I'm not. Like, you don't understand the difference between lot sizes. Like, that just goes to show you don't know how this shit works, bruh. Okay, but anyways, S&P 500. What's our account balance? Let's say it's 100,000 because whatever. Okay, stop loss and pips. Same thing. Go to the S&P. Boom, 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 boom. Okay, what's our stop loss? Okay, 1,807. And yes, that is correct because the S&P is usually in points. Okay, so usually it would be, less than that. PIP is less than a point. All right, I don't want to explain that any more than I have to. Okay, and then moving forward, right? Because it'll calculate it in pips for you. Okay, so boom, this would be 4,700. This one would be 789. Okay, got it. Cool. Moving forward. Go over here. We don't care about the US pip size. We do care about the risk, set what your risk tolerance is. Okay, and then now for the contract size per lot. Most offshore brokerages, okay, most of them are 100 units per lot. Okay? So don't make the decision of like, oh yeah, I'm just going to go based off of what most are. So we're going to teach you how to do it. You're going to open up your little MetaTrader, okay? And then you're going to click on SPX, right? And then it gives you the option to trade, chart, or details. You are going to click details. And then from there, you are going to find the line where it says contract size, okay? See on mine where it says contract size, and then to the right of it, it says 10, okay? That means it's contract size, 10 units per lot. So that's what I'm going to plug in here. If you have a different offshore brokerage, if you don't use Henko Trade, odds are yours is probably going to be 100. A lot of prop firms, their units per lot is going to be 10. So make sure whenever you open a new account with a different brokerage, with any different firm, with anything, you check this because this could really mess you up. Okay, so boom, 10 units per lot, calculate it, boom. This is the lot size I will be using. Just like that. Plug it in, take a trade. That is how you calculate lot size. Super freaking easy, but it takes a lot of time. So this is what I like to do, right? And this just takes kind of a little bit of time to start understanding yourself and how you trade. But let's say, right, I have a relatively good feel for how I trade, and I can kind of understand how large my stop loss is going to be. Most of the time, or here, let's pull it over here and let's go more towards market. Yeah. Okay. So, most of the time, my stop loss on the S&P 500 is anywhere from 400 pips to like 4 points to, we'll say I don't know, we'll for this example, we'll just say 4 points to 7 points. Okay, so what do? You go in here, switch this to pips. Okay, let's say our account balance is still $100,000. Stop loss and points. You're going to set your minimum, right? Like what's usually the lowest your stop loss will be during a trade. Okay, so for me, it's usually 400. Okay, we calculate that. Boom, 25 lots. Perfect. Okay, that is going to be our set lot size. And you're probably saying, well, that doesn't make any sense. Well, it does, because that means I'm going to be risking 1% if price hits stop right here. That also means
Imagine being able to build an app with your name on it, just by thinking about it. Meet Base 44, a complete AI.
I'll be risking 2% of my account if we have a larger stop loss and price goes to 8 points, right? Let's say for one day we have a really large stop and it's an 800 pip and 8.
So this is a quick little. So it stopped for now going down. I believe this is just a lower high, and then it's gonna go down a little bit more. But if not, this is the upturn. So if it like passes this right here to continue going up, that's why I'm gonna hop in. You feel me? Because I believe there isn't a retracement. I mean, unless, yeah, I mean, these are retracements. These could be called for retracements too. Maybe. But, just give me the fig. Put this back. Let's get back into it.
Point stop loss. That is 2 times my regular 1% risk. So even if I have to have a larger stop loss, it won't matter, or it will matter. I'll be risking 2% instead of 1%. But since I'm on a live account, I don't really care too much about percents because I just have that set loss size. So it makes it super easy for me where I can just go, boom, plug it in, enter the trade every single time, because I know, okay, what happens if we have, boom, price all the way down here? Cool, I'm risking 3% of my account. Okay, this is why I like this so good, because I have a great feel of what my average stop loss is going to be. So I have a good idea of like, hey, I'm probably going to be risking this much today, and if it goes 2x that, cool, I'll be risking 2%. And if it goes 3x that, cool, I'll be risking 3%. Most of the time, it never goes to 3% risk, which is why I like using set stop loss. Okay, and something to keep in mind, your set stop loss is going to be different for every single pair. So that's something you have to figure out. And if anything, you guys should only be trading one pair right now anyways. But, okay, keep that in mind. Understand that every pair is different. Every pair's stop loss is going to be wider, smaller based on the volatility and the volume. Okay, so understand that. Okay, so that's how you do set lot size. All right. For me, now we'll get into like my tricky stuff. You guys should not do this because you guys aren't even profitable yet. Turn profitable, calculating lot size or using a set lot size, then come back to this. And, you know, once you get a better feel for the market, okay?
Okay. It's good to know, motherfucker. But, so, boop, 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 boop. Okay. So it is recording. So, it is currently it's 2:54. It's about to be 3 p.m. I am about to go DoorDash right now. That's what I was getting ready to do. I have the market currently open. I set a trade before I went to go take a break after I finished recording my TJR clip at around 12 or at around 12. At around 12. And it just hit my take profit. So right here, I set it right here to go down to, I had, these are lows marked out. I set it at the first low and it hit it just now. And I had it times 2 because I had it for both of these. And so I just took profit. So that's what I came to update you on the trade, the paper trade that I took. I took profit. So it was it was based off it passing this for real. Like once I seen that it passed it like over here, the reason I took this trade is because I seen that it was going down. Compared to this other trade that I had up here, I took this trade because I expected it to go up and hit these highs. Like I thought it was a liquidity sweep, and it turned out to not at this area right here. And I was watching it continue to go down, and I'm looking at where it's aiming for. So I just decided to hop in and put the target at one of the lows, and it ended up hitting one of the lows. So so I believe it's still gonna continue going down. Like it went all the way down to right here. It hit my stop loss around right here. So it took out this low right here. So it may or may not take this or continue going up. But right now that's good enough trading for today. That'll be the only trade I'm taking for today. Like I said, I'm about to go do DoorDash. So yeah, that's what I'm at now. These were what I took profit of. Boom, boom. So, and there you go. So, I'll see you guys later tonight if I'm not mistaken. Yeah.